Silver and gold had a great week. We're going to review that in this video, but more importantly, we have a predicament. What is going to happen as we move into the coming weeks, months, quarters to the price of the precious metals and the mining stocks? There's some major world events, major stories from this week that will actually have a big part in determining the future of the metals. We're going to cover all of that and a lot more in this video. Let's get started right now. Hey, the sun came out just like when you decide to spend some of your precious time with me here in Ron's basement. I appreciate you being here. You can give the video a thumbs up, subscribe to my channel, or hit the bell notification. That way you'll get alerted every time I put out a new video. Gold closed the week at $1,764 per ounce, up about 2%. And we need to remember, gold is not that far off its all-time highs. It's about 15%, 16, 17% away from the range that it was when it was at all-time highs. So gold is doing pretty darn good, all things considered. Silver closed the week above $20 per ounce, a great week for silver. 10%, if my memory serves me correct. A very good week for our friend silver, and some interesting developments coming through legislatively to encourage more solar. That could have a big impact on silver, but we'll touch on that a little more later in the video. The mining stocks, the GDXJ was up about 8% for the week, closed at around 33. Now let's remember there that just back in April, just what, 3-4 months ago, it was at 52. So there's a huge runway. I mean, the mining stocks are just now starting to bounce off their bottom they hit recently, their 52-week lows they hit recently. And, you know, as things improve for the metals, things will improve for the miners, and there's a huge runway just to get back to recent 52-week highs. The silver miners ETF was also up about 10% for the week. So let's now move on to some major news stories. And the biggest story of the week, well, there were two big stories of the week. Number one, the Federal Reserve raised interest rates by 0.75% because they are fighting inflation. They're going to fight inflation. Didn't you hear? Joe Biden put them on a mission to control inflation. So the Fed is aggressively raising rates. They've raised the rates now to a point where most economists say it's kind of neutral, and if they raise any further, it will have a contracting effect, a negative effect on future economic growth. But the other major news story for this week was the GDP numbers. We got those on Thursday. The economy contracted in the second quarter by 0.9%. That was the second consecutive quarter of contraction. That means recession. Now, Janet Yellen is trying to deny that. I don't know if you heard this. It's pretty darn funny. She said, we're not going to call it a recession. We're going to call it a transition, which reminds me a lot of one of her other favorite erroneous terms when she used to refer to inflation as being transitory. So we're in an environment now where the Fed is cornered. The Fed is in a big pickle, okay? They don't know what they're going to do. They actually took away a lot of forward guidance because they don't know what to do. They're painted in a corner. They're in a pickle, however you want to say it. They are trying to fight inflation, right, with tight monetary policy, raising rates. But at the same time, all the statistics, even the most generous government-generated statistics, show that we're in a recession, which means they need to lower rates. If they lower rates, that'll push up inflation. That'll push up prices. If they continue to raise rates to fight inflation, that'll make the recession worse. They are in big trouble, a lot of uncertainty, and at the end of the day, when they're painted into a corner like they are, uncertainty is fertile ground for the price of real assets, gold and silver. And mathematically, we all know anyway, with the amount of debt the country has and everything else going on in the world, that there's just very favorable macro factors for the precious metals as we move into the end of the year. So to sum it up, we have a dovish Fed, but we also have a hawkish Fed. We have a very confused Fed because they are screwed. They're in a position where they don't know what to do because there's not anything easy to do. Any way out of this looks very, very difficult and very, very good for precious metals. Thanks for joining me in the basement. I really appreciate your time, and I'm going to look forward to seeing you again. And until then, you be well.